Alright, weekly commentary. Alright, so before I start the weekly commentary, let's apply some of the teachings that we went over in chapter 1. 1st of March, 1st of June, 1st of September, December, and I have March again and June. So we can see a whole year's trading. And what did last year's trading from March to March do? Well, from March to March, of course, with the help of hindsight, we've run up higher. But what have we run up higher to? We've run up higher into all of this imbalance. Sorry, one sec. And we traded within the last lesson that I've put out. We've traded into this order block. So if I just bring this out in real time, you'll see. So we found support at this order block right now. And this is something called, well, I'm anticipating on the DXY, a market maker sell model. So this is a model that I'm going to teach you guys. And it happens on all time frames, the daily, the 4 hour, 1 minute, 17 minutes, whatever, it's fractal. Essentially what the market maker sell model has is two sides of the curves. It has the sell side and the buy curve, right? So you see here how we had this reversal and we're moving up higher and we're moving up higher in this formation, like coming up, consolidating, moving higher again, consolidating, expansion, consolidation, expansion, consolidation. We want to see where the next expansion is down to. So where does it make sense to expand down from? The thing is, we are trading in a very, very deep premium right now. And shorts are more favorable in a premium than longs. Consider what's going on with the whole Ukraine global situation with Russia. Putin is kind of on he's trying to control everything in the world right now. And he kind of has everyone in a headlock because he does control a lot of the world's supply of power. Now, if America can't buy their oil, the Russian oil, in their USD, that would take a big toll on the DXY. Now, you guys must be thinking, Omar, what the hell? We're just technical analysis. No, we're not. We are traders. We consider everything. These markets are representations of the real life current affairs. The market cannot show bullishness in the term of a recession. Everything has to be in line. So considering that, we're at a very key level on the DXY right now. We've traded into this premium order block. The last up candle before. Look at this displacement down. Change of state. There was a large change in the state of delivery. This order block from 2020. This was the start of COVID, by the way. I think this was when it took a big toll on the market. And we moved down lower. And now we've traded back into that area. Let's just see the open of this candle. The open, I want you guys to look at the O here. The open of this candle, 99.795. This candle's high, 99.418. The tiniest gap left. I wouldn't be surprised if we sweep that and come lower. There is a tiny little imbalance within this area, but I don't really see us trading into that. Right now, we want to consider where is the DXY trying to expand into. We had this large expansion move down. Now, we did sweep these lows and we're seeing a move higher. However, was this a move to fund the attack on buy stops, or simply is this just a retracement up into this imbalance to then carry on the move down? This is where patience comes in because you don't want to trade this mess. This is a mess. We don't like to trade those things, right? NFP didn't really give us much. However, FOMC. This is the craziest news event. So the FOMC meeting is when the Fed talks about anything to do with interest rates. It's to do with the Federal Reserve team and their monetary policies, right? Monetary policy being usually interest rates, if they're trying to hike interest rates, reduce them, whatever. That's what we want to see. However, right now, with the current affairs going on with Russia, I think it's been held in this range until there's going to be an outcome with how the US economy is going to purchase Russian oil. If they have to buy Russian oil in Russian rubles instead of buying them in US dollars, that will take a large toll on the DXY. I think then we will start to see the end of this trend and we'll start attacking sell side liquidity, but only time will tell the outcome of that one. And this is where consulting with the higher time frames is going to give you peace of mind because where are we trading? What are we trading to, right? Why are we consolidating here? We don't consolidate in random areas, right? The fact that we're rejecting this order block quite nicely, it shows one of two things. We are respecting the bullish those bearish order blocks right now, which shows that there could be a change in the state of delivery. However, the buildup of liquidity around it now, with this high and this high, they're not exactly equal, but they're close enough. There's a buildup liquidity above this red line as well. I want to see a clear move on the DXY before participating heavily in the market. If you are participating on pairs cross to the dollar, do reduce your risk. Simply because look at where it's trading. I like to call this no man's land, right? So let's go down into the 1 hour chart and let's look at how this week has unfolded. So that's Friday. This is Friday's trading. Thursdays, Wednesday, Tuesday, that's Monday. And I want to add some context as well for you guys. It's the wrong one. Whenever we have a consolidation, this is what I like to do within the consolidation. Box off the consolidation. So when I mean box off, you can get a box and, box out like per se like this. But I like to get the fib. Now, with the fib, it is going to show you the premium and the discount within the consolidation. Above the 50% is premium in the range. Shorts are favorable within the premium range. Now, below the 50 is a discount range, and buy opportunities, longs, are favorable below the 50. Now, it's not just below the 50, you want to match the discounts with certain things, right? So, let's look at here. When price comes into this discount, we want to see the willingness to go higher again above the 50. So we see this expansion move up, take out these highs, retracement down into this OTE from this low to this high is definitely an OTE, and then we move higher. When you get to the premium, you want to wait for a premium short setup to form, and that's how you can trade a range. I personally don't like to do it, but if I want to trade, this is how I go about trading it. You want to always, within the trading range, right? So now this is our range that we have the DXY from here to here. Don't bear this in mind because this was last week's trading. We didn't know this was happening until it actually happened, right? So ignore this for now. Above the 50 is always your short opportunities. Now you don't just short there. You have to wait for your setup to form. Now in here, when you saw this high, this low, and then you break this low, look at the displacement away from this low, yeah, comes in. This is your order block, fair value gap, imbalance here. You could short it. Now it does come back up here, but you short your short position that you opened at here. What is your target? This low. You should exit here. Comes back up, takes out this short-term high, tests the 50% of this order block, and it comes down back into the discount range. Now, you don't want to take it all the way to the bottom of the range, right? I would have saw this nice imbalance to fill, and that's probably a good exit area that you could have exited until looking for the next position to go long within the range. When we saw this, right, these equal lows we've had marked out for some time now in the mentorship. We've looked at these equal lows for maybe 1 or 2 weeks, right? We sweeped this low on the Wednesday. Do you notice how the low of the week, when this low was swept, the low of the week was placed in at a liquidity sweep? Now, this is kind of a fast forward into the mentorship, and I say that phrase so much, a fast forward into the mentorship to what's coming, whatever. But the low of the week, they don't happen at random places. They always happen at some sort of significant level. Significant level being a run on liquidity, or could be a higher time frame order block, a higher time frame imbalance. It's just about matching it to a logical time and price within the market. And then what do we see after the sweep? We saw the run above. Now the run above is not a strong move, right? We see all of this buying and selling within it. We've filled. Now look at the bodies of the candle, right? Let's look at this candle's low. Look at the L here. The low comes in at 98,656. And look at this candle's close, right? 98,655. We overshoot, the wicks overshoot the imbalance close a lot. Not a lot, by a small portion. But now what we're seeing moves to the downside on the DXY. We've taken out this little low. Let me remove the fib now, just to clear up the chart. We've taken out this low. After taking out this high, we've taken out this low. We want to see if price wants to trade below here. If price does continue trading below here and doesn't find support at this order block, it's likely price is going to go down for the DXY for the week. But we want to see where Monday opens, and especially want to see where FOMC on Wednesday takes us. I don't want you guys to trade FOMC. It's worse than NFP because it's to do directly with interest rates, monetary policy, and interest rates are what? They're the underlying movers of the forex market. Let's go into the euro. So on the euro, when we opened up, I had these equal lows, right, marked out on the mentorship chart section for myself. We had these equal lows marked out and we wanted to see the run on them. Now, I didn't know when the run was going to happen. I wanted to see a run higher before the run lower. But either way, it works out because if we ran lower and then we're going to run higher. If we ran higher, then we're going to run lower because there was liquidity on both sides, being here and here. Now, early within the week, what did we do? Let me just put out Sunday's price action as well. So this little area from here to here, that's Sunday's price action. Now, you know how the market opens on Sunday 10 and then it trades on from there? So you see, look at the date here. This is the 27th, 25th of March, 27th, and then it's 28th. This small price action is Sunday. We trade lower. We take all the sell stops. We tag in sellers, people that are selling the euro on weakness all of this week. And what happens? 1, 2, 3, 4, 5, 6 hours of an accumulation. And then the move happens at 4 a.m., which is the London kill zone. And then there's a protractionary move down, and we move higher again. However, what do we leave? What do we leave on Monday? We leave these equal highs. Yeah, we leave these equal highs, and we don't trade above it again on Monday. So what do you have? You have a target going into the next day. You wait to go lower, yeah. So the daily candle, you wait for it to go lower, and we trade above it. Now, when we trade above the equal highs, remember, as when you take out a high, it's likely that you will see some sort of stall or come back down. It wouldn't just pump in one way because people that are buying up here, you want to tag them into the trade and bring them down, and you want to suffocate their stop losses essentially. Because the people that are buying, that have their buy stops above here, if this was the candle that just went up and there was no coming down in these two candles and this candle replaced this one and you went all the way up, these traders would have, they would have actively won that trade because this candle would have triggered their buy stops, and because it's going in one way so fast, they'll win that trade. But notice how this candle isn't in the kill zone, yeah? This one right here, this down close candle. It's an hour before it. So the first hour of the kill zone, we move up higher. And then 4 a.m., we move lower. What's this creating? Let me zoom in on it. What are these? Let's look at the lows, yeah? Here. 9792, 9794. It's 2 pipettes. 1/5 of a pip difference. So before you expect to move higher, this is what you're looking at. So let's box it off. And let's go down into a 5-minute. Right here. This was the relative equal lows made here. Yeah, this acts as a retail support level. What happens? Move up and move lower. And this was the explosive move. Now this was the move. I think I did catch this move. I got in early because I didn't want to get left behind. And I think I took profit above this high. Maybe around here, I think. Around this candle I took out. If I took out here, I would be God. Doesn't matter. I still made profit. Doesn't You don't need to hold above here because if you're gonna just keep holding, when are you gonna take profit? If your mindset is I'm gonna keep holding to the very top, well, how do you know where the very top is? It's likely then you're going to come back. You're gonna take profit in some sort of, retracement. So it's better to always place your take profit and stop loss. As soon as you click that trade, you press buy or sell. You want to have your take profit and stop loss, and you don't move them. If you're going to move anything, you move the take profit. You don't ever move the stop loss. Ever. That's a rule. That is a rule that should be in everyone's trade plan. You don't move that stop loss. Now, the take profit, you can either move the take profit, or if you're actively monitoring the trade, you can take a partial close to your take profit, right? So you can take off maybe 80% of the trade. You take profit at your normal take profit, and then you let 20% run, maybe above like here, and then you can close the other 20%. If that 20% comes and stops you out, the 80% that you closed off will mitigate and make profit on top of the loss that you made on the 20%, right? And then Tuesday and Wednesday we move higher. Remember, Wednesday was that sweep on the DXY. Now I want to show you guys something. This is what I really wanted to show you guys. Do we see any equal highs above here? No, we don't, right? This high and this high, we won't see them as relatively equal. But there's a relatively equal highs here for the DXY. But you don't see that on the Euro USD. And if you were only looking at the Euro USD, you would have never saw this move downwards coming. You wouldn't have seen it coming. But if you're using the aid of the DXY and saw that we just swept these 4-hour lows, you can then apply some logic and saying the DXY just swept some lows on the 4-hour, and we're seeing, you know, accumulation, or we're seeing some sort of consolidation around the low, and we're seeing a move higher. What do you expect on Euro USD then? The move lower. But if you're just looking at the Euro USD chart, you would never saw a sweep on these equal highs, right? This is where you always have to consult with the DXY. If you can, and you have the equipment to do so, have a chart of the DXY open and have a chart of the Euro USD open, just so that you can have them in sync. Now, you always use the DXY as the lead pair. You wait for the DXY to make its move, and then you actively look at the Euro. You don't wait for the Euro, then the DXY. You wait to see where the dollar's going on the DXY, and then you look at the Euro, right? Other than that, it wasn't really a fruitful week. If I just clear all of these drawings, if we take a look at the daily, we see this expansion move up, right? And then we're seeing this move down. If we take a fib and we extend it out, we can see that we are close in OT. We are in OTE range for this to move higher again. I would like to see it come a bit more into this imbalance because the way that the week's closed, right? We have this 30-minute order block. Remember, 1, 2, 3 consecutive down candles make one order block. So if we extend this out in time, this is a liquidity that's resting in the market right now, and it's from the previous week. So if we do open in the market, when we do open, I want to see a run down lower, because if the week is truly bullish, if the week is truly bullish next week on the euro, we want to see the run lower happen first. We want to see the low of the week being placed in early in the week. Think about it right now. You have a job. Your job, the criteria that you need to do is you need to make a bullish week unfold within the market, but within doing that, you have to place in a low of the day, you have to collect liquidity on the sell side, and then you have to make the high of the week. What do you do first? If you have to end the week bullish, what do you do first? Do you go and make the high first and then the low? Or do you make the low first and the high? You make the low first and then you make the high, right? So that's where you'll see Monday, you always want to see a run lower if your bias for the week is bullish. That's one of the main reasons I don't have to trade Monday often, because I want to see what is Monday used for. Is Monday used to fund the move lower to make the low of the week for a bearish week, or I'll be trading extremely heavy on the Monday? This is where it's just data collection. It's just about being patient. This is where patience kicks in, because you don't need to actively trade all the time, guys. You don't need to do that. Letting Monday pass is fine. It's healthy. Go enjoy your Monday. Have a 3-day weekend. Have a 4-day weekend. The Friday, Saturday, Sunday, and the Monday. You only need 2 or 3 good trades a week, realistically, unless you want to be a freak and kill it. But then again, you have to accept the fact that you're going to be more prone to taking losses because you're trading more. The more that you trade, the quicker that loss will come, and that's fine. Take a loss is not a big deal. Losses are normal. They're fine. Whatever. They're completely fine. But you just gotta accept that, and you have to make that sit right with you. That if I am going to trade more, I'm going to have more losses in my account. So that's how the weekly outlook for the euro unfolded this week. Looking at the weekly chart, the weekly chart is what offsets me. What offsets me is that we are just tagging into this order block and we feel this imbalance. That's the only thing that is offsetting me. And if we look at the DXY, if I remove these, on the DXY, what do we see? The run lower on these lows, and now we've closed the candle looking a bit bullish. This is where it's a bit weird to see the direction, which is why, because the weekly is showing what? We swept this liquidity and we're closing bullish. But then the daily is showing you what? We traded lower heavy, and now we've rejected it off the 50% imbalance of this candle. Do you see how the weekly and the daily aren't lining up? That's where I want to wait before there's clear indication of where price is trying to go. However, if we did sweep these lows, it's likely that we will go and sweep these highs. Just pure logic of taking active sellers to people that are willing to buy, right? And people that are willing to buy at a very high price at that. Monday will tell a lot on the trading week. There's also a few teachings that I said in this midweek commentary. So I say watch this one again. When I was talking about the weekly candle making the low of the week quickly, where you can expect them to form at higher time frame order blocks, higher time frame imbalances, at liquidity sweeps, etc. However, now let's move on to Bitcoin because people are just banging on about Bitcoin. Let's go to the weekly. I want to give you an introduction to something that we're going to cover later on as well. It's called institutional order flow. Now, institutional order flow trumps market structure. It's not even close. Market structure is a little baby compared to institutional order flow, right? Institutional order flow is essentially looking at what is being respected, and I've drilled this into you guys from chapter 1, and you guys haven't noticed. What's being respected? What liquidity pools are being respected? Is it the highs being respected and the lows being removed, or is it the lows being respected and the highs being removed? Now, adding on to that, we are going to be adding on everything in chapter 2. We are adding on to that. We're adding more meat onto the bone. Are we seeing bullish or bearish order blocks being respected? Are we seeing bullish or bearish mitigation blocks being respected? Are we seeing bullish or bearish areas of imbalance being respected? What are we seeing? Because the order blocks, the mitigation blocks, the imbalances, etc., that is the institutional order flow within the market. Now, if institutional order flow is truly bearish for Bitcoin, this bearish order block with this bearish mitigation block, we should see them being respected. Now, if we draw a fib to outline our premium and discount, we see it is at the 79 level OTE. And if we go from this one, it's still under the 50 here. So you could see a move from this high to this low. If you can see where it goes to the 50% of that range, that's the premium discount within that whole price range. However, from this high to this low, it's OTE right now. If I just remove this, oh, didn't mean to do that. How we treat this order block right now, if we're seeing true rejections off of it, if we go into the daily, yeah, clearing this buy side liquidity out into a higher time frame order block. If we trade underneath this low, it's likely that we're going to trade into all of these up close candles. There is a ton of liquidity resting below here. This low to this low, they're relatively equal. These two candles, they're daily candles. You see how the wicks are very even on a low time frame. So let's go to the 13th and 14th of March on a 15-minute. Look at this low, this candle, and this candle. They're very, very close to each other. Small volume imbalance on the 15-minute. I wouldn't pay so much attention to that though. On the 4 hour, this looks like prime market maker sell model. This looks like a prime market maker sell model. So you see how we're taking out, now we're trading lower here. If we're taking out this low, guys, if we're taking out this low, you can say goodbye to these lows. One, to trade into this imbalance definitely. Could even be the move to the 28k level. This on the 4 hour is not good for longs at all. You see how this consolidation, move higher, retracement, move higher, retracement, move higher, retracement. That's called hedging in the market. Every move higher has shorts, has sell positions put in place. The, the way institutions trade, right? They have to hedge their large positions within the market. So if they were to short the market, they have to buy and then place in shorts, and they kind of pyramid their shorts in, and they put the most shorts at the reversal, so above here, and it makes sense because they're above old highs. All these people willing to buy, they're all buying this, right? And I'm in a retail group chat for crypto. Trust me, they're all buying Bitcoin right now. They're buying above all these highs. They think that is bullish. And when people are buying, well, look how expensive this price is to buy at. Smart money are selling to all of these people buying it. And the theory of the market maker sell model says that it will come and trade below the initial consolidation before the buy side of the curve. The buy side of the curve being this, and this being the initial consolidation. So this low, this low, this low. Time will tell, of course, but that's something that you want to look for and consider that. The fact that we've traded above these highs, look at this candle, traded above all these highs, and then look at the consolidation and the move down. That's very interesting for Bitcoin. The dollar, I want to see where the dollar is going to go. It's, it's not the most clear right now. I wouldn't recommend trading it until it is very clear. But that's going to be all for this midweek commentary. Well, this weekly commentary. I'm going to start considering as well doing the 2 lessons a week. It won't be 2 lessons every week. It's going to be 2 lessons where I feel like you guys can handle the 2 lessons. Because, for example, chapter one, those lessons were in depth. They were very new. The data ranges, the open float, those type of things, right? If I done 2 lessons a week on those, your head would be spun. But now that we're going over things that are kind of more mainstream, like order blocks, mitigation blocks and breaker blocks, they're taught wrong everywhere. But like imbalance and those type of things, I think that you guys could handle 2 lessons a week on those type of things. But when the lessons start becoming, I feel like they're gonna become harder, or I want more focus on some lessons, then I'm going to result back to the 1 lesson a week because it's just better for you guys. But where I feel like it's necessary to do 2 lessons a week just for speed up your guys, learning curve, by all means I'm gonna do that. I'll be with you guys on hopefully Tuesday or Wednesday with the next lesson. Any questions you can ask me. Let Monday pass before trading. Trust me, let Monday pass. I'll speak to you guys next time. Take care of yourselves.